Hey guys, Bradley tuning in. I asked you guys a question, what topic should I cover this week? And I got a bunch of responses. A lot of them had to do with the market, and I'm going to continue to do market updates, but I had one in particular came in from Johnson Orby, which I'm most excited to tackle here. His question was why and when to sell an investment property and save money on taxes. Okay, so I'm going to tackle this question. But I'm asking you guys to leave comments on other future topics that you want to see posted here. And if you're following on Facebook, make sure you're leaving a comment and turn on your notifications so you see these pop up as well when we are live. If you're on YouTube, make sure you subscribe at the end of the video. We're going to have a link for you as well to click. So what I want to clarify here is we're not talking about your home, okay? We're talking specifically about an investment property. And we're also not talking about vacant units or scooping up a property and selling it within a year, which is speculating and is riskier. We're talking strictly residential investment properties that bring in a cash flow, okay? So in order to figure out how to sell that, when to sell that property, we need to know why we bought it in the first place, right? Why did we even make that purchase? So at the beginning, whether people realize it or not, I think the first one they do, the second one they don't, there's really two things you got to think about. First is your rate of return. What kind of rate of return are you expecting to see out of it? In the real estate world, we call it capitalization rate, which is calculated your net operating income divided by what you paid for the property. But to keep it really, really simple, it's simply how did you make money, or are you going to make money on that property, okay? So there's two ways to do it. We've got I love how I went four. There's two ways to do it. First is through rental income, which is cash flow, which takes us month by month. But then there's also cap gains, capitalization gains, capital gains. And before we're going to dive into that one a little deeper because they have different tax implications, but both are important and make up the investment. The second thing, so outside of talking about rate of return, is something that a lot of people miss, and I think it needs to come back to a deeper conversation, is it needs to be your real estate investments need to be part of a diversified portfolio, need to be more well-rounded. I think we often think real estate is the way to get rich, but it's not. It's a way. It's part of a larger diversified portfolio. So my warning is that this video isn't designed for any get-rich-quick. We're talking about passive income assets. We're not talking about anything turning over quick or making a quick buck. We want to make sure we've got our rate of return and we've got a diversified portfolio. Okay, so that's why we bought the house. Now let's talk about when we're going to sell it, okay? So I also want to dive into how you're going to save money on taxes, which I'm going to put at the end of here as well. So I think there's a few legitimate reasons for selling. One is the idea of these market trends, and I'm very hesitant to tell people to try and time the market. I like to compare it to those that are timing on stocks and trying to get in it, and I think in the same way people can get hurt or be hugely successful, and you'll hear either side of the story, but it kind of intimidates people. I don't like to look at it that way. I like to look at it with the focus of having a plan ahead, talking with I actually, with my clients, I have a 5-year rule. I say coming in, if you want to have a long-term, as close to guarantee as possible in knowing our real estate market over the last 50 years, is you got to look at it for a 5-year plan. And that goes across the board, condos, freehold, across the board. So generally, that's your timeline, okay? So the second reason you would sell is affordability, okay? So now we were talking about the rate of return and a diversified portfolio. If either of those have changed, and I'll give you some reasons why they could change, then I actually, to also refer you to a video that I've done, I did one a couple weeks ago on, it was called Interest Rate Increase and Market Update, because one of the big reasons for this change is actually interest rates. And next week, on Wednesday, I'm going to be doing a video on Wednesday following it. They're announcing either a change or they're going to stay the same, but there seems to be high increases of a change in interest rates, which could throw everything out of whack, okay? So beyond interest rate change, you could have major repairs on the property, right? So things like your furnace, your air conditioning, they have life expectancies and they could go. Major leaks or molds, if you start to calculate that they're too high, it could be throwing off your cash flow and you're saying, you know what, I'm taking a loss. And in that scenario, yes, it makes financial sense to get rid of the property. In condos, you've got condo fees. There's also special assessments, property taxes. So different things that could increase, that could change those numbers and make it that your return on equity isn't there anymore. One strategy that's used is if you're selling for the purpose of purchasing in certain circumstances, if you set it up right, you can roll over your taxes as well from property to property. But the whole idea here is we want to maintain that passive income. We don't want to throw it off. So whether you're selling to move it into a different asset class, you got to make sure that that's going to pay out a passive income so that we can keep that retirement in focus. All right. So all of that to say, I think there's an old school view of investing in real estate where people have limited themselves to a single property simply because they're not looking at these things. But if you consider that you've got a rate of return and a diversified portfolio, there's no reason that through financing and through leveraging those properties with cash flow and capital gains that you can't finance and get a second property and every 10 years continue to double in just a healthy, ongoing, long-term market strategy, okay? All right, so as promised, I want to jump into how to save some money on taxes here because I think that this is, some of you might have heard of some of these strategies, but they're hugely powerful, and you might not even know how they work. But I want to share them. So there's 3 ways that the government, the CRA, will tax you on these investment properties. The first is income tax. We know income tax because it's how we get charged for employment income, right? It's 100% taxable. Whatever you make, you're going to pay that portion at your marginal tax rate to the government. But in real estate, there's a unique advantage that we have something called capital gains tax, which is 50%. So let's say your property over 5 years goes up by $100,000. The government's only going to come back at you for 50%, $50,000. All right, so that in itself is a huge opportunity. Where you run into trouble is when people are trying to flip a home in a single year. The government will deem that as income because they see that you're making money from the sale, not from the rental income from the property. So you really got to check with your accountant and make sure those timelines make sense. But my favorite tax to pay is no tax at all. All right, and I'm going to give you the single biggest way to avoid paying tax in the most legal way possible, but it's a huge opportunity. If you're purchasing a property that you yourself will live in, you get something called a primary residence exemption. And what that does is it means that if you live in the majority of the property, you can claim 100% of that property as a primary residence, which means the government doesn't charge you for any capital gains at all, completely free and clear. Another benefit that gives is you can actually get in with less than 20% down. Typically investing in an investment property, you need 20%. That's just a baseline. But when you're purchasing a property you live in, as many of you know, you can get in for 5 or 10%, regardless of what your decision is in a year or two's time. So there's certain people that just move primary residence to primary residence, again, needing to make sure that they're talking to their accountant on how to do it. But that's a huge opportunity to get started in investing in real estate investment properties and to still get the cash flow to subsidize your purchase. So as mentioned, make sure you're checking with these professionals. I don't want this to be taken as specific advice, but I want to at least give you some strategies. Next week on Wednesday, the Bank of Canada is making an update on interest rates, which are going to have, I think, a big impact. As much as they're going to be small in nature, we've definitely seen over the last 6 months that people respond in quite a quick way, and they kind of take a step back. And I think that a change in interest rate for the first time in a long time is going to do that, have a little bit of that same effect. So it'll be interesting to see what happens. I've actually heard that there's as high as 50 to 60% chance that they're going to be increasing it next week. So I'm going to be running a video at 12 o'clock noon, going live again on Facebook to give you the update on what they did, why they did it, and what impact that's going to have as well. So again, don't forget to add the notifications on Facebook so you get these live videos. Add GTA Real Estate because I want to start transferring over everything and going through that group page. If you're on YouTube, hit the subscribe button. Look forward to your comments. Hopefully you guys can share this with people that you think would benefit or that are thinking investing in real estate and want to get to know these little tricks that I think will get you miles ahead. We want to save taxes, legally of course, and there's huge opportunities for that. All right guys, take care. I'll check in with you guys next week. Keep it real.